Big news for anyone with a gold loan or thinking about it. The RBI has just shaken up the rules for gold and silver loans, and it could mean a lot more money in your pocket, way fewer headaches, and stronger protections if you need quick cash. Whether you're a borrower or a lender, these changes are a big deal. You're watching Banking Bulletin, your go-to source for financial updates that matter. Let's dive right into the 8 major changes you absolutely need to know before April 1st, 2026. First up, higher loan-to-value for small gold loans. Now, you can borrow up to 85% of your gold's value for loans up to rupees 2,50,000. It used to be 75%. So if your gold is worth rupees 1 lakh, you can now get rupees 85,000 instead of rupees 75,000. That's an easy extra rupees 10,000 in your hands. Second, no more credit checks for loans below rupees 2,50,000. Forget about income proof and credit reports. This one's aimed at helping low-income, self-employed and rural borrowers get money quickly, without jumping through hoops and collecting paperwork. Third, there's now a 12-month limit on bullet repayment loans. So if you're planning to pay the full loan and interest at the end in one shot, you've got to close that loan within a year. This keeps things moving and reduces long-term risks. Fourth, let's talk about limits. Each borrower can pledge up to 1 kilogram of gold ornaments, 50 grams of gold coins, 10 kilograms of silver ornaments, and 500 grams of silver coins. And these limits apply no matter how many branches you use with the same lender. Fifth, instant return of your gold on repayment. The lender has to return your gold on the same day you repay the loan, or within 7 working days at the latest. And here's the kicker. If they delay, they owe you rupees 5,000 per day. Sixth, absolute protection for your gold and silver. If your pledged items are lost or damaged, the lender must compensate you fully, no questions asked. That's real security. Seventh, transparent auction rules in case of default. If your gold needs to be auctioned, you get proper notice. The reserve price must be at least 90% of the market value, and after 2 failed auctions, they can drop it to 85%. Plus, any extra money after the auction must be returned to you within 7 working days. Eighth, communication in your language. All terms and conditions must be provided in your regional language. If you can't read or write, the lender is required to explain everything in front of an independent witness, so you're never left in the dark. Remember, all these new rules start from April 1st, 2026. Any loans taken before that date will follow the old guidelines. So these updates bring you more power as a borrower and put more responsibility on lenders. What do you think about that rupees 5,000 per day delay fine? Is it fair or is it too much? Let me know in the comments. For more financial news, RBI updates and practical tips, make sure you like, share and subscribe to Banking Bulletin. Catch you in the next video.